Eric Muathe, Muathe.com. Now, I get asked this question all the time, whether technicals work in other markets or whether technicals work in commodities or forex markets. And well, as long as all these markets are being traded by human beings, the answer should always be the same, that yes, you can transfer technicals from one market to another market. It doesn't matter whether it's commodities, stocks, ETFs, or forex trading, or it doesn't matter. At the end of the day, as long as we are trading, we humans are trading markets, you can use the same technicals to come to some type of conclusion about charts. So I'm taking a random London Stock Exchange stock, XAR. We're going to talk about some of the things we talk about. In this video, what I want to take a look here is this main 3 periods when the stock has done well, and this is all data monthly, this period. There was also this period here when it did well, and most definitely we want to take a look at this period here, because let's be honest, all of us would like to have been part of this major move higher. So we're going to take a look at all those periods, try and find out whether our ultimate Muathe breakout would have brought us closer to this period. So this is on the description. Take a look at the link here. For those of you not aware, this is what I call the ultimate Muathe breakout. Let's take a look and see whether it meets the minimum requirement during each of these 3 moves. So we're talking about, again, this bullish period here, this bullish period, and definitely this bullish period. Now, if we begin with the previous, or let's say the initial move here, the stock was an IPO at this time, so we did not have fully developed. So around this period there was no RSI, so we have to go to the weekly chart. You always want to go to the smaller time frame that has the next smaller time frame that has fully developed indicators. Here the monthly did not have fully developed RSI, so let's take a look at the weekly chart. And we want to find on this weekly chart, again, the weekly chart is from 03 here to about 2006. What we want to look at is whether our ultimate Muathe breakout, again, check the description for the link to this playlist for more details. So what we're looking for is, where did this ultimate Muathe breakout give us the initial entry? We can see that there was this breakout here which corresponded, so let's take a look at that period. So bear with me here as I get this straight. So we're talking about this time frame here, that time frame right there, and we can see, yes, we got the RSI on the weekly chart moving to all-time highs. Oh, don't forget, we have the price breaking out right there. So it's a price breakout, and we also have our secondary MACD moving to all-time highs. So the initial breakout here at about $20, $30, somewhere in that range, or 30 pounds, we can see that that was good enough to give us a nice entry during this breakout right here. Now there's also another instant of a breakout, which is the subsequent breakout again. So this breakout here, we're talking about this time frame, let's call it about towards the tail end of 2003. So this time period, which corresponds again with RSI moving to all-time highs here, and also we see that the MACDs did move to all-time highs yet again. It's another minimum requirement met. We need only one of the MACDs to break out. We draw another line here on the default MACD setting, and yes, so again we have MACDs meeting the minimum requirement, RSI met the minimum requirement during the breakout here, and you can see that after that we have this amazing run. So clearly the ultimate Muathe breakout gave you the entry on that breakout, this breakout, and the subsequent breakout, and of course we see what happened here. Stock broke out, never looked back in both instances, and would go on to record a major run. So for sure we see yet another example, irrespective of the market, or the sector or the area of the world that it is trading. If those minimum requirements are met, expect good things to happen. Let's go back to our monthly chart. So we can see that we use the weekly chart to get an entry into part of this, if not for some of this move to the upside. Let's go to this breakout here. And what we're going to do, we're going to use the monthly, because now the monthly is fully developed. And we'll see that there was a breakout to 3-year highs on the RSI, so more than 3 years actually. So this breakout right there on the RSI sometime in the middle of 2010 corresponded with a price breakout on the monthly chart right there. So this breakout, also keep in mind we're talking about this time period here, and we can see that at least one of the MACDs was also moving to 3-year highs. So right there we can say the MACDs met the minimum requirement. We only need one of the MACDs to be moving to 3-year highs. We can also see that the secondary MACD was also at the time moving to 3-year highs. So we need one of the MACDs. Here we got both MACDs. Of course, RSI was moving to 3-year highs, and we're talking about this breakout. And after that breakout, what happens is we have a good run in the stock. So this breakout here is what we're talking about. And using our ultimate Muathe breakout, at least we get to ride part of this movement here. Let's go to the last and most explosive part of the stock's move. We're talking about this period here from early 2013 to about late 2013. All right, let's test this. All right, let's take a look at the technicals first and foremost. And to be sure, we are talking about this time period. So right somewhere out there, that time period right there, the middle of that time period. And we can see that we captured the level here back above 69.1, which is one of our requirements. We also see that that corresponds nicely also with the RSI moving to 3-year highs. And keep in mind, we're talking about this breakout in price. This breakout clears that previous monthly closing high. RSI moves to 3-year highs. RSI trades above 69.1. MACDs during this time frame, MACDs move to all-time highs on both, and the main MACD moves to 3-year highs. So you got 3-year high move in the MACD here, which is great. We only need one of the MACDs to qualify and meet our minimum requirements, but we see that this MACD setting was moving to all-time highs, and of course the RSI met the minimum requirement. After that breakout, we get this explosive move. So this breakout met the minimum requirements, and it so happened that the stock was in a mood to move higher. This breakout just led to an explosive. So yes, here is our explosive move. So, and of course, since then the stock has come off the highs here in the, let's call it 1100 area. Now, I was curious whether there was anything on the charts that warned investors here to be a little bit careful. Number one, after such an amazing run here in under 1 year, or somewhere thereabouts, of course you do expect some type of a pullback. But what I found on the weekly is that here during this breakout attempt on a weekly chart, there was a breakout attempt that failed, and that was a warning. Yes, it's on hindsight, it's easy to see that on hindsight, I do acknowledge that, but that failed breakout should have warned anybody who was playing the breakout that something was not right with the stock. And especially again on the back of this amazing run, you gotta figure at some point there's gonna be a pullback. When you come across a situation where you cannot break out above the previous monthly breakout, you get rejected. And not only that, take a look at this here. There was a double top rejection as the stock tried to reclaim the level above 69.1. So that was good enough warning. So you got price failure, RSI rejection twice as it tried to move above 69.1. That's another red flag. And keep in mind here, there was an attempt to trade higher on a week-to-week basis, but the RSI made lower highs. So let me just show that again. So we did close higher on a weekly basis here. So an improvement in prices, but take a look at the negative divergence. And I think that negative divergence with the rejection at 69.1 with a double top was the reason why this became a trouble spot in the chart. And ultimately you can see what happened here. Now if you go back to the all data monthly chart, you'll see that the stock tends to trade well when it's trading above 50 during this period here. Has a good uptrend again during this period here. All this period was generally above 50, which is pretty much captures the best part of the stock's multi-year move. And we can see quite the opposite, that whenever it is trading below 50, it tends to have this bearish heavy behavior. And even recently, generally been trading, let's call it since this period here, it's not been bullish. So we can clearly see that anybody who wants to trade this in the long term and hold it for many weeks and many months needs it to be trading above RSI 50 at the very least, to ensure that there is some upward momentum. And the one thing I want to talk about here is just this idea that we have to understand that stocks behave the same. All trading instruments behave the same. If your technicals are correct, it should apply to any chart that you are looking at. So here we can see a break of this RSI trend line, which killed the rally there. We draw a line from here, and you can see that this line becomes a problem even afterwards. There is this band of resistance here over a period of months for the highs here, here, and ultimately there. We came close during the highs here, did not even touch that level for the highs of 2016, and now we are drifting lower. So all the technicals, the uniformity principles we talk about, and again you can check out that uniformity principle playlist on my YouTube channel. I should have the link in the description. And this works either way. You can see here quite the exact opposite. We had this movement in the RSI, brought the stock off these levels. We haven't been back there. We've been drifting higher since then. We draw a line from here, just slightly at the line should be there. You can see uniform activity bounce on this line, hence the uniformity principle was the entry here about 2-3 weeks ago. So you can use uniformity either for turnaround situations, either way, either stocks that are gonna bounce or stocks that are coming into resistance. And also there's something else here that I was talking about in a couple previous videos, and we can why we should avoid stocks trading below 30.9 as an example. And you can see here stock goes below 30.9 during this weekly move, and that was price range, let's call it about 450, 480. So we're talking about this period here. It goes below 30.9 and comes out of 30.9 level, which was bearish. You don't want to be playing that for a bounce. It moves above 30.9 here at a price range of about, let's call it 250, 260, somewhere there. So either way, you dropped from here below 30.9, recovered back above 30.9 here. So anybody who was playing the bounce thinking that this was where you want to buy the stock would have lost a whole lot of money before they even got any type of a recovery. And this plays also the other way. Take a look at this. You go above 69.1. Now keep in mind, for those of you who are new to this principle, 69.1 is pretty much the exact opposite of 30.9. So when you move above 30.9, as an example, is during this period here. Stocks trading at about 270, somewhere there, 260. It stays above 69.1 during that entire period here, and subsequently drops below that level at a higher price range. So it moves below 69.9 here during this period. So if you stayed long throughout this bullish period, you had a chance of riding this monster for most of these gains, and in an ideal situation you would have been stopped out somewhere here, well above your entry. So watching these levels, you want to stay long instruments that are above 69.1, and you want to stay out of instruments trading below 30.9. Let's finish here and take a look at the all data monthly. Just want to show you something I observed while I was rambling on. It is this idea that the stock moved above this range in 2010. So this entry here hasn't looked back since then. So we can draw a line from here, and what we're essentially doing, we are using the stock's own behavior to tell us when to go long. So every time we have any type of uniform activity below this line and back above it, it's a re-entry. Let's test that. For example, here it moves back above the green line after going below it with what essentially was some type of a dome type formation, which is in my opinion uniform. So let me draw that again. Don't want to confuse you, but we're talking about this line here, which comes off this ideal entry right there. So once we recapture back above this line here, that's an entry somewhere, I would say somewhere there. Stock did recover, and we've come recently and we are bouncing here back above the green line for this recent monthly gain for the month of December 2016. So if anybody who was looking to own this based on this would actually be owning this because it is bouncing on this green line. And keep in mind, it also coincides with positive divergence, as in the monthly chart is making lower price closing levels month to month, but the RSI pretty much is staying within this line. So that's an improvement, and so hence positive divergence. And as a result, I would say anybody playing this one long based on just how stocks tend to respond to technicals can use this opportunity to go long, which might explain why so far the stock is up about 13%. But to summarize this video, if you are going to go long, you'd have to check with the daily chart, and the daily chart is causing a little bit of a problem. So again, all this plays out multiple times, uncountable times in all the charts you are looking at. So the moral of this video is the technicals will work on whatever trading instrument you are looking at and whatever market you are trading on worldwide. And it really doesn't matter whether you're trading markets in Singapore or in Malaysia, or you're trading in Mexico, or I don't care what market you're trading on. If your technicals are correct, then all these things we talk about should actually be playing out. For example, take a look. If you wanted to go along this stock, you'd pause right here. Why? A, it has come off the lows here, coming back to test a downward declining 50-day moving average. So that gives you pause. Again, we see that the RSI is coming back to test the top side of this RSI resistance line that connects recent highs. So here, connecting all these highs, and now it just ended the day back to this line. I'm sure that's not a coincidence. Eventually this might be a problem, so you wouldn't go along here. Keep in mind, if you take a look at the recent break in the RSI trend, so this break here, actually let's even go back to this break. This break in the RSI was a problem at the time. I'll draw it right there, and it brought the stock off the highs here, and we saw a drop. Since then, it's been a good tell for where the stock has been stalling. I just draw it right there. You can see here double top rejection on the red line for the highs there, and it's coming back to test that red line. So clearly, unless it can move above the red and the blue line, we are looking at an instrument that more likely than not is gonna stall around current levels. Again, the moral of this video was to answer questions about whether we can use the technicals I discuss, and I'm just giving you a snapshot of the technicals I tend to use a lot. But yes, you can use the same technicals on any market, any time frame. But keep in mind, if you're using it on a different time frame, it is good for that time frame. In other words, if you are using the daily chart, then the daily chart should be giving you a trade that might last a couple of days, maybe a couple of weeks, right? If you're using the monthly chart, then the monthly chart is giving you an idea of what might happen in the next couple of months, maybe in the next couple of 6, 8 months, 3 months. And if you're using the 5-minute window as an example, then you're only going to get an insight into the next couple of minutes, maybe the next 10 minutes, the next 15 minutes, the next 30 minutes. So the technicals work in any market and in any time frame, but for that specific time frame. Unless confirmation also comes on the bigger time frame, then you can use this to enlarge your view into the future. But if you're using let's call it a 30-minute chart, then use that 30-minute chart to give you an outlook for the next 30 minutes, maybe the next 3, 4, 5 bars that represent the 30-minute chart. Don't necessarily take what you see on the 30-minute chart and make multi-month decisions. So it's good for the time frame you're trading, but it is good across all markets. All trading instruments that have ever been designed should adhere to the same principles. Why? Because they are being traded by the same human beings. Eric Muathe, Muathe.com, as always. Good luck, peace, and blessings. EACS.